Welcome back. The chip sector experienced losses for a third straight day and dragged markets even lower. The Dow closed down around 400 points and the tech-heavy Nasdaq fell more than 300 points. Let's take a look right now at our interactive stock market heat map, brought to you by FinViz, showing the top 500 stocks. A drop in Nvidia stock allowed Apple to temporarily dethrone the chip maker as the world's most valuable company. And to help us understand what's going on here, let's bring in CBS News contributor Javier David. Javier, thank you for your time today. So we know Nvidia seemed unstoppable for a while, right? So what is going on with chips and AI?
Yeah, I mean, what isn't going on really is the real question. Today's session, we had lots of whipsawing. Some of these semiconductor stalwarts, like you mentioned, NVIDIA, Micron, Qualcomm, they fell early. They managed to claw back some of those losses. Overall, there are a few converging themes here hitting this sector that's been a big beneficiary of the AI build out, which is investors just taking some money off the table amid what some fear is a big bubble. The lone exception here is Apple. They've managed to overtake NVIDIA as the world's most valuable stock at the moment. It's kind of choppy, but there are these recurring fears about how much money hyperscalers are spending to compete, plus this bombshell today that we got about Chinese technology rising to the top of some of the artificial intelligence league tables, and gives you the kind of the perfect recipe to take profits. But, you know, this moonshot thing that we're all Twitter about, it's a competitor to things like OpenAI and Anthropic. It's cheaper, significantly cheaper, about 40%. That stoked new fears about all of this money of capital that's being spent on the AI race and whether China's been able to overtake us, even though they're spending far less.
And I think it's pretty clear right now that the other big drivers in the markets and economy obviously are higher oil and gas prices. According to AAA, the average national price for a gallon of regular gas is $3.98, and that is up 10 cents from just last week and more than 80 cents from a year ago. So clearly concerns about affordability and the Iran war, that it's continuing to drag on. What do you anticipate for oil and gas prices in the coming weeks? And are we ever going to see pre-war gas prices again?
Yeah, look, every time we want to breathe easy about Iran, we keep getting these reminders that this conflict isn't even close to being resolved, and every ceasefire is kind of more precarious than the last. The Strait of Hormuz is the thing. It means 20% of the world's supply is bottled up. It's subject to the whims of the Iranian government and negotiations with U.S. and Israel. And what that implies, of course, is, as you mentioned, soaring oil prices remain on the front burner for both all policymakers, politicians, and consumers, because it means higher prices at the pump. Now we're in summer driving season. That's automatically higher because people are traveling and the demand is higher. And this energy inflation just kind of seeps into every other spending category. It makes the affordability frustrations that more acute, pushes off the day that the Federal Reserve may finally feel like it's safe to cut rates. And it just amplifies all the upward pressure on all of the everyday things: mortgages, auto loans, credit cards, groceries, you name it, everything goes up.
All the important things. Javier David, thank you for your time today.